morning, everyone, and welcome to Business Morning. It's a brand new business and markets day here on Channels Television. And as always, we have this 1 hour breakfast time together wherever you're watching us here across the country or around the world. Let's get started with what we called the Buhari on Broad Street. We're wrapping up the year, and news are coming up analyzing the year 2017 across all the markets. And this is also coming through overnight. Bloomberg reports Nigeria among the best performing global emerging markets in 2017, taking our slot alongside South Africa. The only two markets are ranked among the best on the continent this year, and other emerging markets in Latin America, Europe, and the Asia Pacific. Nigerian stock market is around 46% since the year started, and we've seen, though the currency down about 12%, we've seen a number of positives reading on the back of what you call the crude oil output averaging 1.8 million barrels per day for 2017, and high crude oil prices topping $65 a few weeks ago. It's been a very interesting and positive year for Nigeria. So on the back of this crude oil output, which is steady, of course, we've got the output cut from OPEC and Russia exemption. Those positive factors push Nigeria's FX reserves higher, 42% year to date. We are now above $38 billion in our FX reserves. Our current account surplus was also a decent 2.3% at the first half, in the first half of 2017. Then we have a steady FX market swaps. If you listen to Bola Onodele Koko here yesterday, he spoke extensively about the FX markets so far between 2015, 2016, and 2017. Then we have our recent Eurobond offerings. We raised $3 billion last December. We put part of that money, the lion part of it, $2.5 billion, in our reserves, and that helped because we've got to balance the budget for 2017 and 2018. Then, of course, we have about another $500 million go into refinancing of short-dated treasury bills that the debt office will not be rolled over, but will be cancelled, and the repayment, $198.03 billion, that will be from tomorrow, December the 14th. So, the key question we're trying to track for you this time is, what is President Buhari's debt manager's debt strategy? The Ministry of Finance announced about 3 months ago a new strategy to rebalance Nigeria's debt portfolio from heavily local to reduce local, and get a lot more of this pushed into dollars outside, because the rate of borrowing between 6 and 7% globally is much better than about 20% the government has paid in recent years to local bond and treasury holders. So we got a big news yesterday. If you're in the market, you already know this. For the first time in recent years, we saw Nigeria's treasury bills, short-dated bills, below 10%. On Monday, we saw 9.98%. Yesterday, Tuesday, that rate crashed to 8.58% for treasury bills maturing the 8th of March, 2018. That's good news. That means the Nigerian government is paying less interest on those billions and billions it borrows almost on a daily basis from the investing public, from individuals to insurance to pension funds and mutual funds managers. So the Buhari's administration is restructuring the local debt and trying to pay less to investors and who are bondholders, and try to use the advantage of this money to do a lot more on infrastructure. The budget is not balanced, so we need to find more money. And this is what the debt managers of the Buhari's administration are doing, namely the Minister of Finance, who superintend the finance sector. Then you find the central bank and the debt management office. And one of the things that the central bank has done, and if you're in the market news, you know this already, that the central bank has cancelled the open market operation. It was not conducted last week, what is called the OMO. That's the open market operations. The central bank used two primary instruments to mop up liquidity via treasury bills. We have the open market operations and the primary market auction, what we call the PMA. So the central bank shut down or cancelled the open market operations, not issuing new treasury bills via that window, and now allowing the market to do what? To converge, start going down. On terms of yield, that is. So investors, therefore, are now rushing to cover their short positions with significant buying across the yield curve. And that's what you saw on Monday when the secondary trading on the FMDQ OTC was north of 200 billion naira in one single day. So we have liquidity right now on Market Street. What's that liquidity looking like? They have the maturing open market operation bills that the central bank is paying back. Of course, the debt office is also paying back, starting from tomorrow, almost 200 billion. Then you have the inflow from the, what you call the monthly FAC allocations. That's the money shared between the federal, states, and local governments. Then you also have the refund by the central bank of unsuccessful FX bids in the FX market. The central bank has been pumping aggressively into the FX because they're going to go on holiday pretty soon on that. So those who want to do BAs, PTAs, and BTAs, and medicals, and tuition fees will have to get into that very quickly before Christmas. Then you have, so what is the plan here? What is President Buhari and his team trying to do? They're trying to reduce the Nigeria's total debt portfolio, the local portfolio, from 30.23% of 12.5 trillion. Right now, that amount is 12.5 trillion, and that's way, way above our budget. That's about 12.2% of the total GDP to about 25%. That's what the debt office believes is the maximum threshold for the government. But now the position is that we're way above that at 30.25%. How do we reduce the 12.5 trillion naira? And that's what the debt managers are currently working on. And that's what's the result of what we're seeing. The bond yields are also contracting. We'll talk about treasuries. Now, this is about the bonds. These are naira bonds contracting also on the short tenors, while investors pile a lot more into long-dated papers maturing 2036, 2037. Bills and bonds auction rates are also trending lower as central bank and debt office are reopening or issuing new papers at a lower rate. We're looking at today's DMO debt auction of 100 billion, and we'll see what the rates look like in the next 24 hours. Where is all this coming from? Because of the central bank increased confidence over the FX position, inflation also trending lower, which also now giving the market a new confidence direction. You have this in the news already, the redemption of the December 14 and December 21st mature treasury bills, 500 million US dollars. But basically, what the analysts saying on the latest development, which we'll be discussing later on the program extensively. The Fox issue at Chapel Hill Denham, one of the investment banks and securities trading firm, issued a report today, early this morning, saying Nigeria's debt management strategy favors external and long-dated borrowings. This report, one page, as the report says, estimates they estimated Nigeria's treasury bill stocks to reduce to 38% of domestic debt by the end of this quarter. The maximum ceiling there, you saw earlier, is 25% from the debt office. Chapel Hill analysts, research analysts believe this should be around 28% by the end of the year.